A storm is brewing on the horizon of international relations, and its name is Donald Trump. In a move that has sent shockwaves from Washington, D.C. to New Delhi, the former president has issued a stark ultimatum. He has threatened India with a crippling 50% tariff. The reason? India's continued purchases of Russian oil. This isn't just another political soundbite. It's a direct challenge that puts two democracies on a collision course, threatening to unravel years of diplomatic and economic ties. The world is watching, holding its breath to see if this is campaign rhetoric or the opening shot in a trade war. The news broke like a thunderclap, dominating headlines and sending markets into nervous agitation. During a fiery rally in a key swing state, Donald Trump took aim at India's energy policy. He declared, with his signature dramatic flair, that if he returns to the White House, he will not tolerate countries funding our enemies. He specifically called out India for its large-scale purchases of Russian crude oil, which have surged since the conflict in Ukraine began. They are buying oil from Russia, massive amounts of it, Trump stated to a cheering crowd. We can't have that. We protect them, and they give money to Russia. If they don't stop, we will hit them with a tariff, maybe 50%, maybe more. To understand the context, we need to look at the numbers. Since early 2022, India has transformed from a marginal buyer of Russian oil into one of its biggest clients. Attracted by deep discounts, Indian refiners have been snapping up shiploads of Russian Urals crude. For India, a nation that imports over 85% of its oil, these cheaper barrels have been a blessing, helping to cushion its economy from high global energy prices. From New Delhi's perspective, this is a matter of national interest and economic pragmatism. The relationship between the United States and India is one of the most important and complex of the 21st century. It's often described as a partnership between the world's oldest and largest democracies. The creation of the Quadrilateral Security Dialogue, which joins the US, India, Japan, and Australia, is a testament to this deepening strategic alignment. Economically, the two nations have become deeply intertwined. Bilateral trade has soared, reaching record levels in recent years. American tech giants have a massive presence in India, while Indian IT firms are indispensable to the U.S. economy. So, what exactly is a tariff? And why is a 50% rate such a bombshell? In simple terms, a tariff is a tax imposed by a government on goods imported from another country. A 50% tariff would be nothing short of catastrophic for U.S.-India trade. This means everything from textiles and jewelry to pharmaceuticals would suddenly become 50% more expensive overnight. For American companies that rely on Indian suppliers, this would mean a massive increase in their costs. The impact on India's economy would be devastating. American importers would scramble to find alternative suppliers, leading to canceled orders and significant job losses. To understand this aggressive move, we have to analyze the potential motivations. One explanation is domestic politics. The threat plays directly into his America First narrative, which resonates strongly with his political base. Another possible motive is purely transactional. Trump has always viewed foreign policy through the lens of a business deal. Finally, there could be a genuine geopolitical calculus at play. Trump may see Russia as a primary adversary and believe that any action providing economic support to Moscow undermines U.S. security. The tariff threat becomes a direct instrument to enforce a hardline anti-Russia policy. Faced with such a direct threat, India finds itself in an incredibly difficult position, with a limited menu of options, none of them ideal. The most likely initial response would be firm diplomacy and strategic defiance. Indian diplomats would engage in intense back-channel conversations with American lawmakers and business leaders. Another potential response would be defiance coupled with diversification. India might accelerate efforts to reduce economic dependence on the U.S. market, fast-tracking free trade agreements with the European Union, or strengthening relationships with BRICS partners. The potential consequences extend far beyond a simple trade dispute. Politically, it could irrevocably damage the trust that underpins the U.S.-India strategic partnership, effectively pushing India away from the U.S. orbit. This would be a major strategic blunder that would only benefit Beijing. Economically, the fallout would be severe and global. A trade war between two of the world's largest economies would disrupt supply chains, increase consumer prices, and create massive uncertainty in global markets. For the global economy, already fragile, this new wave of protectionism could be the shock that tips it into recession. As we look to the future, this moment serves as a critical inflection point. Will the path forward be one of renewed cooperation or a descent into economic conflict? What happens next between Washington and New Delhi will send a powerful message about the kind of world we are building for the future. What are your thoughts on this? Is this a necessary move to counter Russia or a dangerous gamble that will harm a key partnership? We invite you to share your opinions in the comments below. Thank you for joining us for this important discussion. We encourage you to like this analysis, subscribe for more updates, and stay informed as this story develops.